Hey guys, this is another look at ZB ahead of the inflation number tomorrow, and the Fed is coming up next week, the next FOMC statement. Um, let's give due respect to the bearish scenario, which we see here. These are weekly log scale charts. Price traded up into possibly a lows to lows extension right here and rolled over, and 30-year yield is trying to trade this highs to highs extension to a new high over here. Um, you know, Looking at this highs to highs extension, there's a potential variation of resistance. This one is pretty clean and it traded almost to the tick. But if we go to the yield chart briefly, you know, we have this channel on yield, which is a clean five waves up. And the first time that yield traded this highs to highs extension was right here, this highs to highs. So, it's a 1 to 4 relationship. A wave 1 up, a wave 2, a wave 3. The wave 4 came back and traded into the 50% retracement of this highs to highs extension. And what I had drawn at the time on the ZB chart was, this is going back a bit, but we had this gray channel that looked like a third wave, and then we broke out of it here in what looked like a fourth wave. And this fourth wave corresponded to this fourth wave on yield, right? This came in down into April 26th, and this came up into April 26th, yeah. And so what I was drawing for this fourth wave was a lows to lows extension off the bottom of this wave 1 right here. And so it was this. And we only got to the 38.2, and it ran to the 236. And I remember saying at the time that that seemed aggressive, trading the 38.2, because that happens in third waves, but I didn't think we were in a third wave anymore. It worked, but that's just a hard trade to get into right there. Um, but if you draw up the exact extension that traded on the yield chart, which is coming off of this high at March 28th at I think 3 a.m. So it would be not this low up here, but this low at March 28th at like 3 in the morning right here to this low. And then suddenly it looks very clean, right? A clean reaction at the 50, and we traded up to within the high there was within one tick of the 618. So a much cleaner and easier trade to get into, simply drawing the yield variation of the extension on the price chart. Um, and that ran, it had a reaction at the 236 target to the tick and then ran a little beyond. And so what I've done on this chart is simply mirrored the yield chart and drawn the same anchor to new lows. And we had a reaction at the 50. We had these wicks coming off the 618, and then around the rollover, TradingView does the rollover differently, but we dipped into it. But on the weekly or daily charts, the weekly extension is the lows to lows variation of it on the price chart. But on the daily chart here is the yield setup. And you can see we dipped in right around the rollover right here. There were no daily closes above it, and that means there's no weekly close above it. But with these reactions, it's arguable that it traded a second time, just like the yield chart has traded. And so I'm going to leave this on the daily chart to see if we get reactions at the 236 and the 618 targets. And so remember, what was the high on the yield chart over here was the spike of the 618 target of this highs to highs extension. So if we go up, if yields continue to go up, we'll have to watch we may never get there, but we'll have to watch especially the 618 target of this variation of the extension for possible trend exhaustion. So I just wanted to point out that, you know, now having access to sort of this live yield chart on the smaller time frame, it really does seem like identical setups are trading on both charts. So I just wanted to point that out. So the bear case, we talked about it. The extension is traded, we have targets below, and we have still not broken out of this clean channel on the 1 hour chart. Right, so if the extension traded, this could be a wave 1 down, I think. I think this wave completed today, and we'll get into that. But you can't get bullish until we break out of this channel. Okay, now let's just talk about the bullish scenario. The bullish scenario is, I think, the same as the yield chart. This has to be some sort of impulse wave, and this is an A down, a B up, and then this is a C down, and not a wave 1 down. In which case, it seems like this could be the low if you're bullish. I half sound like a crazy person talking about bullish scenarios here, because nothing bearish has broken, but except that this wave seems complete. And so what I'm talking about is, in the last video I was talking about this starting here. I was talking about this looking like an ending diagonal with these overlapping waves, right? There was a 1 down, a 2 up, another wave down, and then this wave, and then this wave that came into the stealth fib support level that I have drawn here. And we got not one more wave, but 2 more waves down. And so there's still an ending diagonal here, but this wave was not part of it. This was, you know, the rollover makes this chart weird. You have to go to a smaller time frame, but apparently there's an extra wave up here. So up here there's a 1 2 1 2, and then there was a 3, this was a 4, and this was a 3 here, and this was another 4. So wave 5 starts right here on this high. And what we've been trading is, it's very technical, but it's a series of measured moves coming off of this anchor right here. So we traded, let me just take this off. We traded this, we traded this setup once to a 618 target. We traded the same anchor to new low twice to a 618 target down here. You can see this wick here, and then we retested. And then we've had a reaction the third time, the same anchor to new low. So if you're gonna, you know, view this as an ending diagonal, starting here, this first move to target right here, from here to here, is a 1 down, up into here is a 2, down to here is the 3, across the channel is the 4, and within this ending diagonal, this could be an ending diagonal that goes 1 2 3 4 5, more overlapping downward waves. And you know, this had a move that dipped in and front ran its target by, I think, 2 ticks. And then if we do the same thing, if we draw the same anchor to new low, we came back into the resistance, I think, and we again came up short of the target. So I guess you can't get really bullish until we break this setup and until we break out of the channel, which we still have not done. But you know, having an ending diagonal within an ending diagonal, these overlapping structures, it looks like whatever is in this channel it looks complete. And so, if there's going to be a bearish setup tomorrow, maybe they break out of the channel and they trade into a short from highs, maybe. Or if there's going to be a bullish scenario tomorrow, maybe we break out of the channel in something that looks like an impulse wave and we trade along from lows. And I like it when these long setups, you break out of the channel and then back test it, and the back test coincides with fib support. That would be a potential bullish scenario tomorrow. So the only thing that's bullish really is the yield chart. Let's see. Let me go to the 30-minute time frame here. We have continued to find resistance on yield in these, here's the high on yield over here. We have continued to find resistance in the fib stealth resistance zone over the past couple days, 3 days. No, actually June 6th to June 9th. And so again, I was just looking at the yield chart here, and this is my take on it. It looks like a complete 5-wave move up in this channel. And notice how this time the 5th wave came back and made a barely marginal new high on a bearish divergence on the yield chart and kissed the median of the channel, which is exactly what price did. Right? Price came down, and there are these 2 hourly wicks in the 8 and 9 a.m. bars that underthrew the median of this channel here on a bullish divergence. So it seems like regardless of whether the scenario is bullish or bearish, it seems like the wave in this channel is potentially complete. So tomorrow with some volatility, we should break out, and it's going to be a question of whether you should buy the dip or sell into resistance. And I just, the price action has been so what do I want to say here? It's been so interesting this week. So I have here, this is the stealth fib support zone, and if I just draw the long from lows here, this is the long from lows, and we had reaction and we undercut it, and then we looked like we were trading it and we undercut it. We were trading it again and we undercut it. So every morning there was a stop run, stopping people out. And then we, broke the 618 line, and we came back and we traded, but we traded the stealth line, and then we came back and we undercut that. And so if you want to be bullish, I'm almost wondering if this is an accumulation pattern. Maybe I'm trying too hard to be bullish, but it sure seems like this is just algorithmic abuse of retail traders trading known and obvious support levels, and just running stops in an accumulation. Maybe that's absurd, but it certainly does seem like, the only setup that worked here, if you are long or think you should be long, is the channel. This channel has been golden, right? You can buy any touch of the channel, and here at the low we had this underthrow in what looked like maybe an ending diagonal here. So the channel has worked, and the stealth fib resistance zone has worked. And so without those two setups, nothing else has worked. If this is some fib support level down here on the price chart, I can't find it. I think this is simply trading the yield resistance. I'm almost out of time. Is that everything I wanted to talk about? Yeah, I think so. So watch for the channel breakout, and it's really anyone's guess what direction the next move is. Okay, thanks guys.